and welcome to Financial Money Save My Finances, a feature of Yes, Money Does Matter podcast by the Financial Money School. My name is Nicolette Mashile, and of course, I am your financial guide today, and I'm going to be hopping on some of your money questions. Today, we got a question from Sam, who is in Durban, and he'd like to know, how do I save on my home loan? Guys, if you know me, you know that saving is very important, right? Number one. But finding those quirky saving tips and tricks, that is my favorite thing in the whole world. Now, I know that a home loan is often one of the biggest financial commitments that one is ever going to make. So it's very smart to make sure that you are saving on it, but not only just saving on your home loan, finding a way to save through your home loan, right? So I think let's step into some of those strategies and see what's the best way to reduce the total cost of your home loan. I think that should be priority number one. What you don't want to do is to end up paying more than the interest that is due to the bank. So you've got to make sure that you are paying them as little as possible. Remember, I always say it is the relationship between how much you borrow, which is the principal amount, how much interest they're going to charge you, and what is the loan period. Generally in South Africa, we know that the loan periods range from 15 years, 20 years, to 30 years. The very conventional one is the 20 years, right? It's the one that a lot of us probably have on our home loans. Now, they've taken that 20 years and they've taken the amount that you've borrowed with the interest that they're charging you and other fees, and they've calculated what your minimum monthly payment is. Now, this minimum monthly payment, if you pay based on that, in the frequency of it. Remember, a home loan is also what we call an amortizing loan, right? It's one where you're going to pay frequently certain amount of money, and as you are paying, the loan is going to get finished, right? But however, we know that if you've done a loan amortizing schedule or a table, you will see that for the first couple of years that you're paying off your home loan, you're paying majority of the interest portion and not necessarily the principal amount. What you do need to make sure you are doing is to lower the principal amount as much as possible, so that when they calculate what it is that you need to pay every single month, they're calculating it on a lowered outstanding balance. But to be able to do this and to win the actual mathematical equation is to pay more than the monthly required amount. So this is very important. Right, so that's why we speak about paying extra. It's always said in jest, just pay extra into your home loan, just pay extra. But nobody really ever explains what does that mean for mathematical equation. In reality, I'm going to give it to you as an example. Say, for instance, you owe the bank R1 million on a home loan. They've given you 10% on that home loan as your interest charge, and it's over 20 years. Let's assume you're paying 10,000 Rand every single month on that home loan, right? That is the minimum monthly required amount. In the beginning of your home loan, what you will see is only a small portion of that 10,000 Rand debit order that goes off your account every single month will go towards the actual outstanding balance, which is the 1 million Rand. It will pay off a huge chunk of the interest that is being charged, which is the 10%. So you may find that maybe 8,000 Rand is paying the interest and the 2,000 Rand is actually going to the outstanding balance, right? Now, because it's an amortizing loan, the more you pay, you may find that in year 10, it is now balanced itself out. 5,000 Rand is going to the interest portion, 5,000 Rand is going to the outstanding balance. In year 18, you may find that 2,000 Rand now is going to the outstanding balance, and the 8,000 Rand is going to the outstanding balance, and the 2,000 Rand is going to the interest portion. Because ultimately, the bank wants to recover their money first, which is their profit. Remember, the interest portion is the bank's profit. So they want to recover that first, and then ultimately they will recover the amount that they actually borrowed you. So that's why we mean when we say pay extra. What we're saying is add more money so that it goes towards the actual outstanding principal amount that you borrowed, which is now known as the outstanding balance. That's what paying extra actually means. The next one is to save by refinancing your home loan. Now, of course, after a year of you getting your home loan, it might not be the right time for you to try and get a refinancing loan. What is refinancing? Remember, your loan is initially financed by the bank. So you've gone to the bank, you've borrowed money to finance that loan, they've given you the money to buy the home. Now, when you refinance, you are actually trying to just rechange the terms and conditions of that home loan. right, of the credit agreement. So let's say you got a loan, 1 million rand, 10% interest rate over 20 years, right? Now you go to another bank or potentially the same bank and you say, I need to refinance this loan. There may be various reasons. The first reason, maybe you actually cannot afford the minimum monthly payment of 10,000 rand every single month and you want to bring it down to maybe 8,000. So what you would refinance is the term or the interest rate. I would say probably the term, maybe you push it to 30 years, right? Then the minimum monthly installment will come down. Or the other reason for refinancing is that maybe you are in a better position now. Your interest rate, your credit score has picked up. You are earning maybe more than what you were earning in the previous month. And instead of just paying extra, you actually want the whole loan to be refinanced and recalculated, right? So this is what it means. Or you actually feel, with a good credit score that I've got now, surely my interest rate can be re-looked at. And the bank might be willing to re-look at your interest rate. I know people that have done this and they've moved their interest rate from 10% to maybe 9.5%. You may want to downplay that 0.5%, but let me tell you, it's a big amount of money collectively over the 20 years that you're going to be paying that interest rate. So also, again, very important to look at refinancing your loan. It's important because it also will ultimately tell you how much you end up paying. It will actually reduce how much you end up paying. Of course, if you refinance with 30 years, you'll pay a little bit more. The next one is looking at the term of the loan. Taking a shorter term may mean paying a higher monthly installment, but it does mean that you'll pay less overall because you're going to be paying over a shorter period. Remember, as long as you've got an outstanding balance, the bank has the right to charge you at the full interest rate that they've offered you. So let's say you are now in year 18 and you are now owing only 50,000 rand on a 1 million rand loan, or what was a 1 million rand loan. Just because you're owing 50,000 rand doesn't mean the bank is not going to charge you the 10% on the outstanding balance. They will still charge you that 10% on that outstanding balance because that's what you agreed to. So as long as you have an outstanding balance, the bank will charge you. So the quicker you get rid of the loan, the better. That's why it's important sometimes, if you are able to take a much shorter repayment period. So a 15-year home loan or a 20-year home loan, which is the conventional. But when you start pushing it to 30 years, just know that you're going to pay much more interest than you would have if it was much shorter. The last thing that you also need to think about is that there is a possibility of you saving into your home loan. So if you have, in South Africa, what we've got is a thing called access home loan accounts. So some of the banks give you that. Sometimes they're called by other names, flexi home loan accounts. But basically, it's a loan account where you are able to prepay or pay in advance. Now, when you pay into that loan account, the money sits in that account. But in a home loan case, either than or very different from what they do with a car loan, in a home loan, that money is effectively already added into your home loan. So it looks as if you've made a huge or a big extra payment into your loan. So the bank, what they'll do is they will quickly calculate using that amount of money how much your next installment will be. So it will go towards your outstanding balance. The only difference is you would need to call the bank to ask them to capitalize that money into the loan. Then it becomes permanently part of the loan and it's a payment towards the loan. But if you don't do that, it sits in an advanced account and you are able to still tap into that money. So it's almost like building cash equity into your home loan. So you have access to that amount of money. And that's why a lot of people like to use it as if it's a savings account. So if you've got extra money that you've got in your bank account that you do not need, throw it into your home loan. It will help in those months to bring down the monthly installment that you're going to be paying, right? When you do need it, you go for it. If you say, for instance, 12 months has passed, you've built another nest in a different account, you no longer need that money, capitalize it so that your home loan gets recalculated with a new advanced payment. So that's very, very clever because it assists you in making sure that you are keeping money in an account where it's going to work for you. Yes, it might not be earning interest because it won't earn interest in a home loan account because it's not an interest-bearing account. But then you've got to ask yourself the question: if I were to put it in an interest-bearing account, how much would it make there versus how much is it saving you if you put it into your home loan account? The last tip I'd like to give you is, of course, to consider when you're getting huge money windfalls, whether it's a boyfriend allowance, whether someone's giving you a money gift, whether it's money you're finding in your clothes that you didn't know it was there, whether it's a tax refund. Make sure that you are putting it where it's going to work. What you don't want to do is to come back 3 months later and say, yo, remember in January I got 50,000, but now in March you can't remember what you did with that 50,000 rand. Put your money where it's going to change the bottom line. And I think the home loan, if you do have a home loan, is the perfect place to park that money until you actually have something that you really would want to do with it. So, Sam from Durban, I do hope that I've answered your question and I've given you something to think about in terms of how do you save in your home loan. It's those extra payments, it's considering some refinancing, choosing a shorter term loan, and of course parking all your excess savings money, even your emergency money, into the home loan without capitalizing it to make sure that you do have access to it when you do need it. And last but not least, any cash windfall that you may get, please throw it in there, park it in there until you know what it is that you would like to do with it. Remember, every little bit does help. And the sooner you start, the more that you will save. This was a feature of Yes, Money Does Matter, a Financial Fitness Bunny podcast brought to you by the Financial Bunny School. It is, of course, Financial Bunny, Save My Finances. Please remember, none of anything that we say on this show constitutes as financial advice. If you are looking for financial advice, please speak to somebody who's certified and registered with the FSCA. I will see you next time with the next question. For now, thank you and bye.